if you're good at sales, it's a great way to make active income. So if you're interested in wholesaling or interested in that piece of the active income, this is a great episode to listen to for sure.
Trying to do get rich quick stuff, like whatever I could, so I started like day trading stocks, looking at e-commerce, drop shipping.
And we have like 3 different businesses, and then we still have our 9-to-5 jobs. We're like, obviously trying to elevate those to like eventually, move on from the 9-to-5s.
Me and my wife went to New Zealand for a month and, just tried to like find myself, came back and I was like, I want to get into startups.
What does your portfolio look like currently, like the entire thing? 'Cause it sounds like your biggest focus is the wholesale, but I'm curious what your like your real estate portfolio looks like right now.
You have the opportunity to use that money to make significantly more money. It doesn't make any sense to have it tied up.
Although the projects that you're wholesaling is you're floating deals to investors that are willing to take on more risky investments.
Actually, just in March of last year, we had several big deals that were coming together and we're closing and we're being signed around.
So let's just say you divide that by 500, okay? Because let's just say $500 a month in cash flow.
You do everything in like sprints, like periods of extreme work, and then you take like a mini retirement.
Can you just break down the process A to Z, like what the heck is wholesaling, and then kind of why you decided this would be your like main strategy for real estate investing? Welcome back to the Weekly Juice. As always, it's your boys, Ryan and Corey here with another episode. Today we interviewed Mike DeHaan. He's a real estate investor, and more importantly, he specializes in wholesaling. So in the episode, we kind of went A to Z on how to get into wholesaling, what the process looks like the handover process. Mike talked us through through a few hilarious situations.
Yeah,
been through
some cool
pretty
stories.
Crazy stuff, wild stories that I didn't really think you'd kind of experience in wholesaling.
Yeah, he gave us the ins and outs of wholesaling. He really took us through how he literally had a seller get abducted from the closing table, like at one of the trailer parks, I guess, that they were doing a closing in. So he gives us the good, the bad, the ugly with wholesaling. He also happens to have 42 units of his own between him and a partner that brings him $10,000 a month in passive income. The dude's in abundance, so he's a millionaire that's around other millionaires. He kind of gave us the wholesaling breakdown of like how he made $100,000 when he was just on vacation, right? And how he made $100,000 on another random deal just based on solving problems for sellers, finding buyers, and then just connecting the dots. And it got us excited genuinely about wholesaling and how it could be the next step for us. Although he did give us, like I said, the good, the bad, the ugly with some of the horror stories from it. But like anything, if you're good at sales, it's a great way to make active income. So if you're interested in wholesaling or interested in that piece of the active income, this is a great episode to listen to for sure.
Yeah, couldn't agree more. We could go into it further and further, but I think let's let Mike take it away and tell us how it's done. Mike, officially welcome to the Weekly Juice podcast. Corey and I are so excited to have you on the show. Thank you very much for coming on here and sharing your story with us.
Yeah, man. I appreciate it. Thanks for having me. I've been looking forward to this one.
Absolutely. So if you could give a little brief background on yourself and then talk us through the story of how you got into real estate investing.
Yeah. So I guess currently right now I'm a real estate wholesaler for the most part, I guess. I guess that's technically my, real estate label, I guess, but I do it all. I have rentals, I do flips, I do everything. And we do it kind of large scale around the country. So we currently do it in 9 different markets around the country. I started that back in 2020. So I've scaled relatively quickly with that. Going way back, I don't really have a real estate background. I didn't come from a real estate family. It's funny, I actually found out when I started getting into real estate that my parents had never actually had a mortgage before because they lived in the same house for my whole life and they'd owned it for a long time. So, and back when they bought it, they had a situation where they were able to buy it cash and, they knew nothing about real estate at all. So when I got into it, it was very foreign to pretty much everyone that I knew. So growing up, typical childhood, growing up in the 90s, you're going to go to college, you're going to do the whole thing. So that's what I did. Went to Gonzaga University here in Spokane, Washington, where I'm based. Got an engineering degree. The whole time I was going through that whole engineering degree process, I was like, I don't really like this, but my goal was, when I get out, I'm going to be able to have an engineering salary. I'm going to make good money. I'm going to do this whole thing, right? That's what we all kind of get sold. I graduated 2013. Kind of right after the economic crisis was starting to peter out. So getting jobs was so freaking easy. When I was applying for jobs out of there, I would get, especially because I was an electrical engineer, I would get grabbed by every recruiter and it was like, we will pay you whatever you want to come work at this company. So I was able to snag a job at Boeing. which was kind of like one of the pinnacle jobs for Pacific Northwest. You go work at Boeing, you get golden handcuffs, like you have, they don't call it golden handcuffs at that point. You get a fat salary, you get good benefits, you can, work on airplanes, like it's dope, right? So go there, start my first day at the job. From about the first hour I was there, I realized I'd made a grave mistake and that I was probably not going to be a good fit. I kind of had that in my gut, but I'd sort of like made it, right? So I decided to go along with it. Was there for a couple of years and, just was not happy with the situation at all. Very, very corporate, as you can imagine. And in that period of time, I would have these huge sort of sections of like months and months where I would do nothing at work and I couldn't go home. I couldn't do anything. So I would just start dabbling in like anything that I could to pass the time. And me realizing that there was more to life out there than what was going on, I started getting into finance and investing. I started, of course, trying to do get rich quick stuff, like whatever I could, so I started like day trading stocks, looking at e-commerce, drop shipping, you kind of name it, anything that I could do to make a quick buck to like, retire early from that. I started getting into the FIRE movement pretty big. And then, so I was there for a while. And then, I decided I just need to get out of Seattle. Maybe I try a new career, got a new job out here, in Spokane again at a local utility here. And then a year of that, I just decided that engineering wasn't for me. I've been doing it for 5 years at that point. So in January 2018, I just cut the cord and was basically like, I don't know what I'm going to do, but I'm just not going to do this. And I quit my job with no real plan, no anything, and went from making 6 figures to not having an income, pretty much instantaneously. And I was fortunate that I had a wife that had a pretty decent job, cost of living in Spokane wasn't too crazy at the time. And I had a lot of savings because I had a high paying job for 5 years. So I was able to, go into that with some level of comfort, but I pulled it and I was just like, no idea what I'm going to do. Real estate wasn't even really on my radar at that point. The only reason that I knew about it at all was because my best friend and now business partner had started dabbling in student rentals. But all I knew was, it sounded like a lot of work. And I was still fixated on the get rich quick sort of schemes the best I could, right? So, left at 2018, traveled a little bit. Me and my wife went to New Zealand for a month and, just tried to like find myself. Came back and I was like, I want to get into startups. So I started working, I taught myself how to code over 3 months, started working for a startup based out of Chicago. And in that period of time, I started like meeting with startup people. They get into investments, they get into real estate, things like that. And that was kind of my soft introduction to the concept of passive income and remote work and like scale, and how exactly to structure a business around, a certain lifestyle, because that's also what a lot of startup guys do. And so I was diving into that. I quickly realized I didn't like the startup game. So I tried to figure out what's the way that I can replicate that mindset and that sort of work process without having to, have as much of a technical barrier or like a scale barrier, like, a skill set barrier, like e-commerce or things like that. And then real estate, I was kind of like, just makes perfect sense. It's in my back door. I can see the houses, I can buy them. It's very easy for me to do independently. And so I started down the real estate rabbit hole there. So
Got it.
Yeah. And so that was kind of like my introduction. And then 2018, I liquidated my corporate 401k to get a little bit of a nest egg, bought my first couple rental properties. Kind of hamstringed me a little bit because I put all my money into these rentals that were already all fixed up and I had no ability to refinance the money out. So I was like, well, dang, I need more money. So I started flipping houses 2019. I had no idea what I was doing. I had like literally never held a power tool, done any sort of renovation or anything like that. So I just was going by the school of YouTube and then networking people as much as I can. Flipped some house 2019, 2020. Early 2020 decided that I wasn't going to have enough opportunities that I wanted to start scaling like I could. So I approached my now business partner and was like, hey, you remember how, all these deals that I'm buying from these things called wholesalers. Like I'm paying them $35,000 for these deals. Like, why don't we become those guys and not pay them? Like I'm guaranteed that we can do it. So we ended up hiring a coach, joining a mastermind and starting our wholesale business in March of 2020, which is probably the worst time to start anything, because COVID happened like a couple of weeks after that. And then basically started through that whole period. It took us 4.5 months and about $25,000 of marketing in the hole before we got our first deal. And, from there it was refining, growing, and doing everything we could to sort of, make that process better. And then we had our first 6-figure month, I guess about 3 months after that. And then from there, it's just been scale, hiring, optimizing, rinse and repeat. And now we are in 9 different markets, and I employ, as of right now, 15 people. So
amazing, man. So if you could, what does your portfolio look like currently, like the entire thing? Because it sounds like your biggest focus is the wholesale, but I'm curious what your like your real estate portfolio looks like right now.
Yeah. So as of right now, I should pull it up. I have 42 doors, soon to be 47, across 24 individual properties.
So what is that like? So that's a lot of, single family, duplex, triplex types, right? You just mentioned. So what is that net you? I'm curious. It's always interesting to hear as people get in the short-term rental space, there's like this, higher cash flow opportunity. But if you're in the long-term rentals, we're noticing we handed our portfolio over to a property manager. I'm not sure what your situation is. And, we lose some cash flow, but I'm curious on the 42, not like on the 42 units, like what that brings you each month. Roughly.
Yeah. So, when it comes to cash flow compared to like residentials, duplexes, things like compared to Airbnb is always gonna be a little bit different.
Yep.
And so like right now our total cash flow is 10,000, like my cash flow, including like not including the 50% of my partner, is $10,200 a month.
That's great.
Okay, that's net. So it's pretty solid. But then if you look at it across 42 units, there will be people that's like, we can do that with like 2 Airbnbs, things like that, right? But but the thing with residential real estate that I really like, especially with how we buy everything at wholesale prices, so we're extremely discounted. So my current portfolio value is at about $9.5 million. My total cash position on my property is about $450,000. Right. So I'm like less than 5% cash into these deals. So I'm pretty much just playing with the house money at this point, because on all of these deals, we've been able to buy them at such big discounts, fix them up if needed. Sometimes we don't even need to, but we can refinance out all of our money. Right. So that allows me to have an incredibly huge return on my cash. And so, our whole model is the properties that we like that have I like high cash flow potential, high potential in terms of their desirability, like in the future, like especially over the last couple of years, we've been trying not to get into the whole thing where people are buying just these dog properties in these terrible parts of town for way too much money. We'll pass on those, but we'll keep the A class, the B class, even if we're paying kind of high for them. So we're figuring in 10 years, people are still going to want this property. Right. And so we use the wholesale for all the dog properties to pay for all the all the A class properties. So for the most part, like a lot of these properties are almost free because the business just buys them, right? And it works out.
Yeah, that was what I was getting at, is that like after a certain period of time, whatever, 10 mortgages or so, it's hard for you to get bank loans. But it sounds like what you're doing is are you leveraging the equity that you have in the properties, or just using the money from the wholesaling that you're making actively to put back into buying more rentals? Is it kind of like what I've heard from a bunch of wholesalers is like, I'll wholesale 5, I'll keep 1, right? Or I'll wholesale 3 and I'll keep 1. Do you have a strategy around that?
So we don't have like a hard and fast strategy like that. And I'll say in regards to the bank loans, because I did things backwards, like I quit my W-2 and had no W-2 income before I started buying real estate, which I would not recommend. So I've never been able to get bank loans. So I've been stuck with DSCR loans or private money or commercial loans from the get-go, which was probably one of my biggest challenges when I started, because I was buying these properties, I want to buy these rentals. I didn't have any income, and the DSCR loans didn't make sense from a cash flow perspective, because back then they were like 8%, just like they are now. It's 2018. So I was going to these credit unions and I was like, hey, I need these rental loans. And they would be like, they want business experience, they want all sorts of stuff. And all they could see was I was just a guy, 28 at that point, 28-year-old who had just quit his job and had no income and now wanted to buy liabilities. And so I had to go through this whole thing, which was a process. But now, because I have that history, it's extremely easy for us to get cheap financing on stuff. Even in these days of high interest rates, because we are such, we have $8 million in debt with our primary commercial lender. All I have to do is text my loan officer and we can get a loan in like 2 weeks without having to do anything. And our rates will be like upper 4s to low 5s as opposed to the 7s and 8s everyone else is having to deal with right now.
Very cool. Before we get too far into the weeds on wholesaling, because I definitely want to do that and kind of explain to everybody the process A to Z. Can you talk to the thought to liquidate your 401k from your previous job?
Yeah.
I think that people talk about that all the time. And there's this big fear of like, hey, this is something you can't touch till you're like late 60s. And, it's your retirement, your nest egg. But what was your thought to liquidate that and to, jump it into real estate to scale faster? And what advice do you have for people that may be thinking to do the same?
Yeah. So, for complete transparency on that, my decision to do that was as emotionally driven as it was, logical, mainly because that was like the last thing that was holding me to the corporate career that I hated. So I was like, it was kind of like a middle finger to the man, I guess, to just like get rid of that and like pay all the fees. And I was just ready to have no ties to that part of my life anymore. So that was a big part of it. But then also too, I recognized that I needed capital to do it. And at that point, I didn't know when I was going to be having regular income again. So I had the choice of either dipping into our reserves and really putting me and my wife into a distressed financial situation, in the hopes that it would work out as I was planning for it to do, or I could liquidate that money that I knew was available, and I ended up taking out as like 110 or something after all fees were said and done. So it was significant enough to get started, but it wasn't like, it was like $500,000 or something crazy. So, ultimately came down to pros and cons. I was more willing to do that than to use all of our reserves and then, make it so I had to go back to work or something like that.
Yeah, I think it's, and we'll get into wholesaling in a second. I think it's really interesting about the 401k thing. I think the 401k is such a safety net for a lot of people. And it's, I think it depends completely on your mindset. The more and more that we start to invest, and Ryan and I are in a syndication, a couple syndications, buying bigger properties with larger investors, the more and more I think about it, I'm like, I don't even think I need my 401k. Like I continuously think that. I'm like, what am I using? Like, I get it's like, it's going to be there as long as I have this W-2 job. It's important, but I just can't fathom how different I'm going to be at 55. Like, I'm like going to be such a different person. Is like, is it worth it to keep it there and keep it growing when I'm like, could leverage it into other assets that are going to grow faster? Like, I remember even a couple episodes ago talking to Brandon Turner and listening to him on a previous episode. He's like, I don't even like, what's a 401k when you get to that level, obviously, but it's interesting at what point in your investing journey that you're like, do I need it? I think your 401k has a lot more money than mine does. So it's like you have money there for the future. But for me, it's just like, I don't even know if I'm going to need that.
Yeah. It's a weird safety net. I just like, it depends on your risk tolerance. I guess it kind of changes for us, right? Like we're getting to this different stratosphere but like for me, I just kind of like opening the app and seeing them like, I'm good.
Yeah.
You know what I mean? Like
if you have like a 2% up day, you're like, oh, that's actually like a significant amount
huge,
that it went up. Yeah.
So it is nice to have, I don't know. We talked about, I believe it was Chris Philbrook. He was a couple, I don't know, way episodes.
That was like episode like 10 or something.
Yeah. I was way back. And he's like, you should just liquidate that thing.
Yeah.
You just go for start buying stuff. And I was like, it would have been potentially an option, right? Had we not found other funds. And like, I also want to talk to like partnerships, right? And like how you would advise people to like get in with a partner to scale faster, because I know you mentioned you have a partner too. Did getting a partner help you get loans? I mean, I guess you told us you really don't use bank loans, or you didn't at that point, but kind of what was the benefit of having a partner and why'd you go that route?
Yeah. So really quick, I want to touch on 401ks because I think that is an interesting point. A lot of people get hung up on that. So, you have to look at where 401ks came from. They basically came from, they needed corporate people to have a forced savings rate because they were trying to get rid of pensions. So a lot of companies used to have pensions, and companies realized pensions are freaking expensive. What if instead of that, we just put the risk of that and gave it to the individual? And 401ks were developed, and they now encourage their employees to do that instead of offering pensions, right? And people get so fixated on the growth and the safety net there, but the thing with them is, you can get stock growth and things like that, which is great, but if you're not super interested in long-term stock returns or things like that, or you have the opportunity to use that money to make significantly more money, it doesn't make any sense to have it tied up. If you have 50 grand in there, you can take that money, you can go flip a house, you can double that money, right? You can make that active income very, very easily if you have the opportunity to do so. You pursue the opportunity to do so, right? So it sort of comes down to, is your income ceiling kind of where it is? Or are you willing to take that money and go and use it to create more active income or like larger passive opportunities for yourself?
Yeah, I
So,
totally agree with that. I'll let you get into the partnerships, but you mentioned the time period of when it came available, or like when people, I kind of look at it like the 9 to 5 almost like that. Like,
yeah.
why do we work 9 to 5? Like truly why? Well, we work 9 to 5 because in the 1940s or 30s or whenever it was that people were going to factories and they had to, and I think it's important to hold people accountable to a specific time frame, but it's like the 9 to 5 for us is not a thing. Like we work a 9 to 5 because we put 8 hours a day into a full-time job that generates us the most amount of income, right? But sometimes I can do that in 4 hours. Sometimes it takes me 8. So the whole thing with the 401k is like, it was built around a time where that time frame that you worked was specific to an industry. And now those industries are not even really relevant anymore. So again, we can move on, but I just think it's interesting that we just do things because it's been done in the past. And that was my thing with 401ks. I'm like, yeah, 10% a year for, it'll give us a lot of money, but like, I think we can make more. So anyway, I touch on partnerships though, too, because we love our partnership, and I'm curious how yours functions and some of the ins and outs of that.
Yeah. So, my partnerships, he's with my best friend from college. So, and the reason I approached him to partner, I mean, was honestly because I needed money. At that point, I'd bought some rentals, I've done some flips, I had some stuff tied up in some flips, and I recognized to start marketing, I needed some additional cash, right? And he had a very strong W-2. He's also an engineer at that point. So that was a big part of it there. And then also too, he had experience in the parts of real estate that I was generally poor at. At that point, I'd done a couple flips myself. I had learned that wasn't my favorite thing. I wasn't necessarily good at it, but that was kind of his MO, was, handling renovations and that sort of stuff. So the general process, like the mindset that I had was, I'll come in and be like the back office. I will run the marketing, figure out how to find the properties, run the negotiation, all that sort of stuff. And then when we find a property, I'll say to you, our goal was never to wholesale. Like our goal originally was to buy discounted rental properties without having to pay those wholesalers those fat fees anymore, right? So the thought was I would find the properties, I'd do all that, and then once he found them, he would manage the project and he would get them all ready to go. And we've maintained that same relationship up to this day, and he still runs all of our renos and all that sort of stuff, even when we have 5 or 6 flips going at a time. So when it comes to the partnerships though, like in ours, we had a very clear separation of responsibilities, which I think is really important. And I think where a lot of people get bit with partnerships is they come in and we're like, we're going to do all these things together, right? And so what ends up happening is always in that situation, one person ends up doing way more work than the other one. And then the person that's doing more work is like, well, why are you making all this money when I'm doing all the work? And it ends up in, broken friendship, broken partnership, all that sort of stuff. So
Mike, I think that's important to note. And we have an interesting partnership because we don't have like specifically delegated roles, really. We kind of both do both. And it, for whatever reason, it really does work out. But I think it is rare because I can feel when the energy pulls towards Rye or when it pulls towards me. We have different jobs, but like we could probably get better at the delegation of specific tasks. I know we could, but it still works the way it is now. And I could see it not working with a lot of partners. Yeah. We don't get jealous of like who's or get resentful about who's doing what. It's just like, it's just part of the game.
I just think like over time, I think to Mike's point is like, if you continue in the same cycle of that and like over and over, you like kind of like keep leapfrogging over each other, doing the same thing. It's like, who's doing what? For me, and we have like 3 different businesses, and then we still have our 9 to 5 jobs. We're like, obviously trying to elevate those to like eventually, move on from the 9 to 5s. But the thing is like the role delegation and the separation of that to like find your lane. That's something that for me is like, I keep saying, hey, we got to like revamp the systems. But really what it means is just like kind of like each having your own lane, and it's within a couple of different businesses at once. So that's what's hard. It's like here we have real estate, then we have e-commerce, and then we have our podcast. So there's a lot of different things. And it's like, it's only 2 or 3 people. So it's really hard to like, hey, do we outsource? Do we hire a VA? Like, what are we doing? And I think once we have more time, like once we finally like we reach that revenue standpoint and free our time of the 9 to 5, then it's like, dude, there's your lane. Here's my lane. Let's go. But, it works for now. And I think you kind of have to set in the beginning sometimes you have to sacrifice it and just, you have to wear all the hats together. Even though it sounds like counterintuitive, but just to get things off the ground, just start. Cause a lot of people like they get through the cycle and they're like, hey, I don't know. I feel like I'll have to do everything. So I'm just not going to start. And they never do anything. And then as you go, you can transform it. Right.
Yeah, exactly. I think that's true. And I guess to start, we did that. I mean, the first couple appointments that we ran and we were like making offers and stuff, we always went together. I mean, and also too, the thing with partnerships, if it's someone that you are, you know, good, you have good chemistry with, and you're doing a challenging business, like honestly, real estate wholesaling is one of the most challenging businesses out there, I think, just in terms of like the emotional roller coaster that it is. Man, doing it solo would just be miserable. Like, honestly, like you just have so many ups and downs and the absurd things that happen all the time. Like you can't, like doing it by yourself, it would be so defeating. Like, you know, we've had such crazy stuff happen where like the belief that you can't count the money until it's in your bank account is so unbelievably true, especially in the wholesale world when you're dealing with off-market sellers. Like we've had stuff happen, like sellers just like straight not showing up for closing, right? You know, or like you'll have a deal that you think is all signed around and good, and then all of a sudden, you know, like the buyer backs out at the very last second because he didn't have his shit together and couldn't get a loan. You know, and all of a sudden you were expecting that you have $30,000 and now all of a sudden you're not, right? And you have to figure that out. You know, and like the most extreme example, like, you know, we had one situation, we're going to the closing. It's this awful mobile home in this like worst part of town. Like we had our guy, you know, our dispositions manager was on site to make sure that the guy showed up to closing sober and was like, you know, able to sign docs. We had the mobile notary come to the trailer and she was all pissed off about it. And literally he's like halfway signing the documents and all of a sudden this dirty pickup truck comes rolling up and this guy gets out and just starts screaming. And basically he just kicks in the door on the mobile, grabs the seller, throws him in the truck and just drives away. And we were like, what the fuck just happened? Like,
so you didn't want that one as
a
a rental, dude?
Yeah, I mean, it wasn't as a rental. It was a, you know, a $10,000 assignment fee we're collecting on it. But you know, the whole situation, like it's funny. My guy at the time, it was his third day at work that was there managing this whole thing. And he calls me, he's like, so this guy just came and like took the seller away. He's like, so like, what do I do? And I was like, what, who was it? He's like, oh, I don't know. So he ended up following him and found out where, you know, got him to stop. And I ended up talking on the phone with this guy. It was actually another investor that had this property under contract and somehow had gotten word that we were closing on it and decided that he wanted the deal for himself, to the point that he was going to violently intervene. He
abducted the seller mid-closing.
Yeah, that's wild.
Yeah, he abducted, and here's the thing that's even terrible about it, even worse about it. So he abducted the seller mid-closing. The seller was MIA for 5 days, like a whole week pretty much. And you know, my guys were going out there looking for him. We were calling him. We couldn't find him, anything. And I'm, you know, back office, I'm just calling around to every title company here in town that I know does investor deals. I'm like, you know, who knows this deal? Who has a file for this deal? I find the attorney that's closing it. And I'm like, hey, we've done a dozen deals with you. You know who I am. I know who you are. Just so you know, if this guy comes in to close this deal, it's fraudulent. Like we were literally halfway through signing last week. And he's like, oh, okay, that's good to know. Don't worry, I won't close anything like that. And of course, what did he do the next week? He closed the freaking deal, man. So he didn't get anything for it, you know? And the thing that sucks too is like the guy that we were selling it to actually had pretty big plans to like fix up the property and all that sort of stuff. Now the scumbag investor that bought it, I don't even know what the whole deal was, but the seller still lives at the property, but now instead of being in the mobile, he lives in a rundown fifth wheel right next door, like in basically the parking area. And there's just squatters in the mobile home.
What's a fifth wheel?
What the hell? Yeah.
What the heck's a fifth wheel? Yeah, I'm sorry.
A fifth wheel is like a camper trailer.
A tricycle?
Got some of you hitch on the back, dude.
Yeah.
Dude, that is wild. It's like like that's not in the job description, right? You're like, oh, you're going to be a wholesaler now. So can you deal with like a mid closing abductions? Just be prepared for that one. That's just wild. Like,
I love it, man. I mean, I love the story. I don't like that it happened to you by any means, but I think with that, let's talk about wholesaling in general. Cause there's some people that are probably listening. They're like, hey, what the hell is a wholesaler? How's this guy getting abducted? Is he alive? Like, I don't know what's happening. So can you just break down the process A to Z? Like what the heck is wholesaling, and then kind of why you decided this would be your like main strategy for real estate investing.
Yeah. So basically as a wholesaler, first off, wholesaling is more so a marketing business than a real estate business at its core. Our job is to find distressed properties and motivated sellers and, work with them to, figure out why they're stressed, why their property is distressed, all that sort of stuff, and essentially help them out of those situations with the collateral being their property that we buy at a discount, right? So it's the general process is you go to public data providers, you can find them anywhere like ListSource, PropStream, your courthouse, whatever, and you get lists of vacant properties, people that are filing bankruptcy, people that have liens on their property, basically anything that would indicate some sort of personal or financial distress. You market to them. There's a lot of different ways people market to them. Our primary means of marketing is direct mail, which, a lot of people think that that's outdated, whatever. It works. It's worked for us for 2.5 years, continues to do so. You can do that. You can send them texts. You can do cold calling. People do online stuff, whatever. If you're really ambitious, you can go and drive up there and knock on the door. So you market to them, you get them to engage with you. You figure out what their situation is and how you can help them deal with that, whether that's, a distressed landlord with a non-paying tenant. They need to sell quickly to pay off the loan. So they're going to go into foreclosure, whatever it might be. You get a contract to buy the property for a certain price, a discounted price, say $100,000. And then if you're going to wholesale it or assign it, you basically take that paper, that $100,000 contract, and you sell it to somebody else with a spread for, 110, 120,000, whatever that is, and you pocket the middle. So, we got into wholesaling primarily because when we started the marketing process back in 2020, the first couple of properties that we got were not properties that we were interested or had the ability to take down ourselves. And so we were like, cool, we will assign these to somebody else. We will make some money and we can roll that money onto the next deals, right? For the properties that we do want to keep. Because, if you go into this business and you immediately tie up all of your money into certain projects, it's going to hamper your ability to get more opportunities very quickly. So we were very selective when we were starting out about passing on stuff and then wholesaling them whenever we could. And then it turned into more of a larger business model after we quickly, especially through 2021, we quickly realized that we could make just as much money, if not more, by wholesaling and assigning these deals than we could by flipping them. And, honestly, last year on the run up, we were keeping A-class properties and we were just wholesaling pretty much everything because people were paying such insane prices for stuff, and when we were able to get such fat checks for some of these deals, it was like, I can take that money and make so much more with it, in other ways that, I don't need to be jumping into this massive project when I can make 50 grand without really doing anything.
I love it. I actually think it's genius, to be honest. And then you guys had a great wave too with the market being scolding, right? But one of my biggest questions is the back half of it. It's like, it sounds awesome. Like, let's, for example, like we use PropStream, you find the list of people, right? You get something, call them, you figure out their why, you get them to trust you. You're like, hey, I have a solution for you. You get it under contract. And then then you have the paper. That's my question is like, okay, how are you finding the buyers from there? For us, for example, I would say we have a list of a bunch of investor friends that have been on the show, right? We'll be like, hey, we have a deal, we can flow you X, Y, Z. But like for you, is there like a business model that you guys like build out on the side or like a piece of your business to source more? These are leads, right? Like I guess you would call it a lead, someone that you want to assign this to.
Yeah. So there are different ways you can do that. And some companies, that's like their whole shtick, right? There's like disposition companies that they just work with new wholesalers or wholesalers who have been around for a while to find buyers. And honestly, our main way that we do it is we have key buyers that we sell almost everything to. And that just makes that side of the business that much easier because honestly, the acquisitions is incredibly challenging. Like, it sounds simple where, you pull the list, you market, you build the trust, all that sort of stuff, but it's very competitive. And especially right now, the biggest challenge is so many people don't have anywhere to go, right? So many people, they're sitting on more equity and more net worth than they've ever expected to have in their life. And they're not willing to just give that up. And, as a result of that, and then retail buyers being willing to buy distressed properties over the last couple of years, which has never really happened before. A lot of the people that we deal with come with a lot of baggage. So we were dealing with that kind of from the get-go due to COVID. So there's a lot of time spent with lawyers, a lot of time, spent like helping people move, helping people find places to, places that will accept them, like all those sort of things, dealing with squatters, all that sort of stuff. So we made the decision a while back that instead of building out a strong dispositions process where we would try to like squeeze extra $5,000-$10,000 out of the deals, we're just going to take the easy sale. We have our list of like key people, and in all the different markets, we have 1 to 4 different people that we sell everything to. And we basically just float stuff to them. And that makes it easier on the acquisition side as well, because if you have something that's kind of funny, you're kind of trying to figure it out, you can go and talk to your key buyers and say, like, hey, we're working this one. What would you guys pay for it? And they'll say, oh, I'd pay 200. Say, cool. I was going to try and get it for less than that. And then that you have a guaranteed exit. So, there's different ways to approach it. Like I've heard a lot of other wholesalers out there talk about how important that disposition process to their company, because they're like, if you can get an extra 5,000, you sell 10 contracts, that's 50 grand a year. I'm like, yeah, it's great, but it's also a lot of work. And ultimately the reason I started this business was to have a lifestyle business where I don't have to do that. Right. So to me, I would rather just have the easy exit and be a deal provider for the people that I know will close.
Love that. Now, question, I thought I heard you say this while you're going through it. Did you say you help people move sometimes? So it's not like a traditional sales process where you're like, hey, you get under contract, you sell to someone else, and then you're done. Like, are you the people that you're getting to move out or like sell you the property? Are you then helping them find housing?
Yeah. I mean, we do everything like that, man. So especially way back when it was just Dan and I, like we had several mornings where it was like Saturday morning, 8 a.m. All right, it's move out day. You signed yesterday. It's time to get out. And we'd spent the previous 2 weeks helping them find an apartment, and we show up with a U-Haul. And of course, what happens every single time, they're not even awake when you show up. They haven't even started packing. So then it's like us, and we have some hired help, and we're literally loading up a U-Haul truck, doing the whole thing, right? And just trying to, move this thing along. And I mean, that's part of the deal. And a lot of people are like, oh, that sucks. That's a waste of your time. It's like, it's not a waste of my time if I'm gonna make 35 grand, like
Totally.
I'll help someone move for $30,000. I really don't care. So
I pay for the U-Haul. Yeah, that's the whole thing. Like you pay for. So you're essentially doing that. Is you're like, I got to make sure that this deal actually goes all the way through. And part of the contingencies are like, these people actually got to get out. So correct. I understand. I think that your structure now is like, so the projects that you're wholesaling is you're floating deals to investors that are willing to take on more risky investments. And you're saying the ones that we want to keep for ourselves are not the riskier investments. They're the ones that, and I say risky, I mean like in areas that you don't want to own property, right? And then you send those wholesale deals to people who that's what they do. That's where they own property. Yeah. And in that process, you're finding that some of these tenants or some of these people that own the homes are they're not super responsible people.
Yeah, exactly. Well, I mean, most of them aren't responsible. That's why, their house is going to foreclosure. They didn't pay a $78 medical lien that came in 6 years ago, and they've been getting mail about for every single month over the last, 6 years. And it's an unfortunate situation, but it's a reality for a lot of people. And, when it comes to dealing with tenants and things like that, we do provide that for a lot of our assignments as well, because that allows us to sell a property for more. So even right now, we had one, we're gonna make a $40,000 fee on it. We could have assigned it for $20,000, and then someone said, well, if you can get it vacant, I'll pay this. I'll pay $20,000 more. And I was like, well, that sounds like a problem that we can solve for you. Like that's worth the squeeze there, right? So ultimately, though, like it's creating opportunities for buyers, but it is also creating solutions for the sellers. Like a lot of wholesalers get bad raps. I feel like, people say you're robbing grandma, you're doing all this sort of stuff. But I can say without a doubt that at least 95% of the people that we've bought their properties from them have ended up in better positions because of that. With the 5% that haven't, there's a couple that stand out, was because of self-inflicted things that they did kind of at the closing line. So, our sort of general motto has been, if someone was to write about the situation that was going on here between us and the seller, and that was to be published somewhere, would I be like ashamed that was out there? And if the answer is yes, then we don't do that. If the answer is no, then, we go ahead with the deal, the transaction. So,
got it.
And a lot of our sellers, like, people will feel like it's taking advantage because you're buying the house at a discount, all that sort of stuff. But most of our people, they don't have anybody in their life. They have no one to talk to. They have no one to help out with anything. And, just because, most people that say that, they're like, why would they ever sell you their house for 50 cents on the dollar? It's like, well, you wouldn't, because you don't, you have an income, you have people to help you. You have, you're not disabled. You have all these things. And for a lot of these people, like they'd have nothing, like literally nothing.
Yeah.
And we're able to, some of them even tee them up for the rest of their life.
Wow. This is interesting hearing all these stories too. And so there's two things I want to touch on. I'll let you tackle them how you wish, but I want to talk negotiation, because I think that's like, you have to have a very high or strong negotiation skills to get these deals under wraps. And then I also want to talk about how you built the business around it, right? You're not just at one point you probably were just a guy sitting at home ripping calls. And I imagine you have 15 employees now. So there's a business structure around this. I want to talk about that too, but can you talk to the importance of negotiation and like building up your skills? I'm thinking of just like maybe how you would advise someone to get better at negotiating and structuring deals, because I think that's like the secret sauce in this whole thing, is like being creative along the way and like finding exit strategies in order to get these things, kind of under wraps and onto the next.
Yeah. So the biggest mistake most people make right off the bat, especially if they want to be real estate investors and they're not, like, they don't come from a sales background, is they go into these negotiations focusing on the house, right? The house is never what matters in these situations. I don't say never. 90% of the time, the house is what matters. The only time the house really matters is if you have a landlord who knows they've let the property go to hell, but they still want to squeeze as much as they can out of it. So, I guess for context, our first salesperson, who was one of the best that we had, her background was not in real estate. She had no finance background. She had no sales background, really. Her background was as a bartender, right? And so when she went into these conversations from like a bartender sort of standpoint of like, she's used to dealing with the regulars and all that sort of stuff, she was right at home. And so when we brought her on, it's funny, we brought her on October of 2020 after we were having trouble getting a lot of momentum in our business. And we brought her on, and we literally did not have enough money to pay her 1 month of payroll, but we were like, oh, screw it. Well, I guess we'll see if she sinks or swims and we'll figure it out. And she was able to get 7 contracts in the first 2 weeks out of the leads that were already in our system. So not even like fresh leads, just following up with old ones, because she approached them from the standpoint of what's going on with you and how can we get you out of the situation, and just sort of like that, customer service mindset, right? So that's a big thing, and is to approach it from there, and like especially the initial conversations. And then the next big dilemma that I find a lot of people run into is when they start doing this at scale. So a lot of people that I've found, that I've met, that can get to the phase that they're doing 2 to 4 deals a month. They're making a couple $100,000 a year. They have a lot of opportunities, but they're just working so hard for it. They're like a 1 or 2 man operator. They're running around, and it's a tough place. Like, they're taking calls at nighttime, on the weekends, whatever. And the biggest problem is that they don't pre-screen their leads right before they go and meet them in person, or they're afraid to bring people on to do that job for them because they want to be the contact for the entire process. So what we do with all of ours now, especially working in all these markets, our sales team's all remote. Like, none of the guys except for one does deals in the market that they live. And the only guy that does is the one that lives here in Spokane. The rest of them are all remote from where they're closing contracts. And so every single deal, we always just verify, 1, do they want to sell? 2, what is their timeline to sell? Like, is it in the next, 60 to 90 days? That's what we shoot for. 3, why did they call us instead of a realtor? Right. And some people get weird about asking that, but we very deliberately ask that because, people know that they can sell it on the market. They're not idiots, but there's obviously a reason that they called us. And that's the greatest way to get solutions to, like, oh, tenants haven't been paying rent. Like, there's some work needs to be done, all that sort of stuff. Yeah. That, for the condition of the property. And then 5, and the least important of them, is what's their asking price. And so many people think that that's the one that really matters, but it's not. And honestly, with those other things, if we get like 3 out of 5 of those, if those sort of like are in our box, then we'll engage with them pretty heavily. And even if price is like way off, because more often than not, if they check the other 3 other boxes, that price is easily negotiable. Like, we've had people that on the initial call, they're like, I want $400,000 for this $300,000 house. Right? They want way over. We go and we walk and we're like, well, I know you want it. We're going to be at like 140. And they'll be like, well, I understand where you're coming from. Thanks for coming out. Could you do like 150? And I'm like, just like that, all the
Yeah.
time. It literally happens all the time. It's crazy.
That system is very cool. Thank you for breaking that down. I'm actually curious about maybe if you want to go into like maybe your most lucrative or most fun deal, fun wholesale deal to talk about, because even that one that you just mentioned is pretty cool about how somebody approaches you just because what they say isn't actually what they're just trying to float that. And then when you get down to the nitty gritty and you discuss what, this property is actually worth, they're like, oh, okay, you're actually right. Like I need to get out of this situation. But do you have a deal that comes to mind that you like to just talk about the intricate details of that we could go over?
Yeah. Are you wanting one like negotiation wise or like just the deal as a whole?
Let's
Like,
do both. Because I think negotiation is very important. We don't talk about it enough. So like one where, yeah, you have to get creative to put it together. And then overall, just pick your favorite deal. And like maybe it's your most lucrative, like what's the biggest assignment fee you ever got?
yeah. Yeah. So, I guess the most lucrative assignment fee that we got, which honestly was probably one of the most creative ones that we had to put together as well. So it was a 5-acre lot that was out in this area here called Airway Heights. And it's kind of like a big expansion area, but there's a lot of intricacies in putting together buildable plats and things like that, because it's very close to the airport. It's very close to an Air Force base. There's a lot of restrictions, things like that. And we got a call from this guy and he was like, hey, I have this property listed. So those are 450,000. That's what I'm willing to accept for it. And, it's like, I'm driving at this point and my act manager calls me and she's like, hey, we got this one. It's like, he wants like 450. So it's like 5 acres. She's like, it looks pretty good. What do you think about that? And I was like, no, like, we're not going to offer that at all. Like, how long has it been listed? Well, it's been listed on and off for 2 years. And I was like, yeah, we're definitely not going to offer that, or like even close to that, even if there is potential with it. And she was like, well, what do you want to do? And I was like, literally driving, had no bearing. I was like, I don't know, offer like 180. Like just basically to see what happens. I just had a general idea that that's what those sort of lots go for in other parts of town. And, so she offers it. He first off is like, F you, don't call me ever again, whatever. It goes away. It's fine, whatever. 5 minutes later, he calls back and he's like, do you guys think you could do 200? Well, yeah, I mean, I guess we can figure that out. And so she's like, you want me to sign it around? I was like, yeah, sign it around. And I was like, cool. So at this point, I don't even know if we have a deal. Right. All I know is that we got this 5 acres for 200 grand. It's in a very, desirable area and there might be opportunity there. So I spent, the next several weeks just talking to everyone I knew that had any sort of interest in subdividing lots, in doing builds, doing developments, any of that sort of stuff. As those conversations were had, they would ask me additional questions of like, well, what's the zoning out there? What's the easement off the power lines that we have to have? And I was going through and basically building this little packet of all this information. After about 2 weeks, I was at a dead stop of like everyone that I knew that wanted to, like those sort of deals out. No one had any interest in it at all. So I was like, kind of, thinking about canceling it. I go to grab a beer with one of my buddies, another investor, and we're just kind of talking about and telling about the deal. And he's like, oh, I actually know a guy who's looking for exactly that. He's like, here, I'll connect you. And like literally, we're having a beer. He texts him. The guy's like, yeah, give me a call right now. So we hop on the phone with him. We're like, yeah, what would you pay with it? He's looking it up. He's asking all these questions and all that stuff. He's like, yeah, I'd be willing to pay 300 grand for that if you can get it for less than that. And I was like, oh shit. I was like, well, I mean, I got it for less than that if you want it, and then 2 weeks later, I guess we signed it to him. 2 weeks later, closed. Cool, 6-figure assignment right on there.
So that's amazing. And I think the reason why I think it's so cool is because you just never know what other people, you never know what they're going through. You never know what other people, and then on the flip side, you never know what somebody else's criteria is. So like, for example, the person who, said F you to the 180, they're probably like, just an example. They're like, oh, I owe 200 on this. I don't know. I just need 200 because I need to get out of $200,000 mortgage. And they're like, well, if you could do that, at least I could be free and clear of this, and I won't owe any additional money. Boom, you're in. And then the guy that you got connected with is just filling his buy box, and then it just happens to match up that you're able to make 100K. So it's amazing.
On that, very interesting. So he asked you, did you get it for less than that? Do you have to disclose? I guess you do, right? The assignment fee. So this gentleman that was buying the property, he knew you're making 100 grand off it, and he didn't care that he was paying 100 over.
he saw it on the HUD. It didn't matter. So he actually developed that lot and sold it for 900. So he's doing perfectly okay.
Oh, he's all right.
So
Great.
for him, it doesn't really matter, right? So it's funny. One of those things in hindsight, I was like, damn, I should have learned land development. I could have made way more money. But like at the time, though, you don't know what you don't know, but it does create ways to think about deals and going through that process as well. And that's the other thing too that I did on this that a lot of wholesalers don't do is I put an incredible amount of time putting in due diligence and getting all the details together that people needed to know. Whereas I know a lot of people, especially when they're new to investing or wholesaling, they're just trying to get the quick bucks. And I mean, I probably could have sold somebody for like 210 with none of that information, but instead I put in a couple of weeks worth of work and made an extra 90.
A couple weeks of work, and you made what you potentially would have made in a year at your 9 to 5 previously, something like that.
Exactly.
So, perspective. Yeah. That's amazing. Speaking of that, there's a lot of people that there's like glitz and glam around real estate sometimes. And we've heard stories of people making buku bucks or doing some nice deals while on vacation. Do you have any stories like that? Like,
do you have any story? He has a story like that. Let's hear it.
Tell me a story, dude.
Yeah, that's funny. That's a tee up from the guy who booked me. So, so that's actually been kind of a running joke with, I guess within my company. So, going back when we brought in that first acquisitions manager in October of 2020, and she started like locking on all these deals. I was mountain biking with my wife in Utah. I'm like pulling over all the time, taking these phone calls. My wife's like, "What are you doing?" I'm like, "I'm trying to figure out these deals right now." And I couldn't believe that was happening. So that was kind of the first taste of it. But the real big change, where I would honestly say my life probably changed, and I realized that we were onto something pretty special, was actually just in March of last year. We had several big deals that were coming together and we're closing and we're being signed around. It was March. I went to Florida with a group of friends from here, and we were, down there hanging out on the beach, playing spike ball, partying, doing whatever. And every morning I would go up and I would be answering emails and trying to get deals closed, all those sort of things. My friends are kind of giving me shit and all this sort of stuff. It's like, "Oh, we're on vacation. You shouldn't be working," whatever. They're all corporate people, right? But we got there on, I think it was Saturday, and we left the following Friday. In that week, my bank account had a $270,000 swing, right?
I'm assuming that was a positive swing, not negative.
Positive swing, not negative swing. Exactly. And of that, just over $100,000 of that was pure profit. So we had a flip close. We had several wholesale deals close. And a lot of those, I was doing all the odds and ends to, get everything done. So, I had $250,000 come back to my account, $100,000 of which was profit. And I was like, and that was kind of when I was like, I think I've like almost made it. Like I was just literally in Florida, partying with my friends, playing spike ball on the beach, doing whatever, and just made more than I used to make in my W-2 while I was down there. So
yeah, man, it's incredible. And like to know that that's possible while you're doing that, while you're on vacation, like not in an office setting, not putting in the hours, not the grind. Obviously you were doing that, but the fact that you can do it from anywhere is inspiring to me. Like, and I've worked on vacations too. Like, it's just kind of one of those things. It's like, is it worth your time to go do this right now? And if the answer is like, this can wait, it's not important, then you don't. But to make $100,000, like, I think it sounds like it's I'll do it from a beach. So, yeah, man. So, I mean, I kind of want to talk about your prioritization of your time. And I know you're a big financial independence guy. I'm just curious about like how you prioritize your time and spending the time with your family, the work-life balance. It seems like you're a big on that. You wanted to create a career or a team in your entrepreneurial ventures that allowed you to do that. So like, do you have any tips and tricks or like maybe philosophies that go along with the work-life balance?
Yeah. So I'm a really big believer in who, not how, if you've ever heard that before. Yep. So whenever there's small tasks, and especially these days with the global economy, I'm a big proponent of virtual assistants and virtual employees. So, of all my staff, I have a huge amount of virtual staff, and not even just like Filipino VAs that are, doing data, but like I have a web developer on staff who's based out of Romania. We pay him a salary. My social media manager is from India. I have a copywriter that's from Russia. So like we have, and all these people are on salary for us at like 20% of what it would cost to have that person as an American employee. right? But they speak perfect English. They're college educated. They're good at what they do, right? And they're happy to do a lot of the general tasks that honestly a lot of American employees don't want to do because they want to be more specialized in things. They want to do higher level stuff. So that's a big thing. And then in terms of my work-life balance, 4-hour work week, Tim Ferriss really has a concept of, you do everything in like sprints, like periods of extreme work, and then you take like a mini retirement. And I sort of operate on the same sort of schedule as that. So over the course of the year, especially over the past couple of years, we'll put in a huge amount of work and I will be super dialed in for like a month or several months, whatever that is. And then, my wife will go on vacation. So like right now for the summer, I've been grinding for a couple of months trying to get stuff all organized, get deals flowing, get processes going, and like building up our marketing, our lead flow, all that sort of stuff. And then, in 3 weeks, me and my wife are headed to Africa for a month. We're going to be traveling around, going safari, and we're going to be there for pretty much the entire month of September.
The reason why I love that, and I do it even in a more of a micro environment too. I love that because I think it goes back to the whole 9 to 5 thing. Like I'll wake up in the morning and I'll work for 2 hours and it'll be like locked in. Like it's not, like I will have everything that I needed to get done in 2 hours, and then I'll take an hour break and then I'll go back for another hour and a half. And then this is just an example of a day I'm working from home. Then I might go to the gym. Like, so you do that at a micro level, which allows you to do it at a more macro level like that, like lock in for a month, right? And then go on a vacation for 3 weeks. Like, I think that sort of life is so much more fulfilling and rewarding than just like the basics, like, oh, we have the weekend off. Like, okay, I got to plan around that. And I get off at 5. And it obviously if you're an entrepreneur, you don't really get off at 5 anyway. But so yeah. I love that stuff there. I mean, I think that's really important. But
yeah.
Did you have something that you wanted to go into?
Yeah. Speaking of the 4-hour work week, love that book. I'm actually halfway through it, and there's a big chapter on VAs, right? So I kind of want to touch on that. I know you mentioned VAs from all over, but they speak fluent English, and you get them for like 20% on the dollar, whatever it is. Can you talk to maybe some resources for people that are looking to hire VAs, like where you found yours, and then how you like onboard them? I'm just always curious of that process. Like once you find someone or like a listing, I guess, like what's the next step from there?
Yeah. So it is tricky because VAs have become so popular that I think that a lot of the traditional methods aren't great. Like if you go on Upwork or things like that, Upwork's a virtual hiring website, or not even necessarily virtual. Well, not like international virtual, but you can hire people to do whatever tasks on there. But the problem is that's become so common that, you go and you look on there and it's hard to know how legit people are. Like I remember one of the last people I hired on Upwork, it was for a lead manager role, so basically calling all of our cold leads. And I had, I think 5 guys send me, I always ask for a recording so I can hear their English when it's a cold calling role. I had 5 guys send me the exact same recording, not like the same script, but like literally the same recording, like, the same 2 people talk. So I was like, they're fraudulent, right? It's not real. And, you see that stuff a lot. So what I actually do, I use Reddit pretty heavily to find people. So there's a Reddit for hire subreddit, and I found almost all of my current batch of virtual employees on there. And you just go post a job listing, and I find that has a very international audience. And the thing I like about Reddit as well is because, it's anonymous and people are not necessarily on there looking for work. So it's very easily to kind of back check them as a person, because you can click on their profile and you can see like, oh, this person follows like, an anarchist subreddit and they're very active. Maybe I don't necessarily want them involved in my business. Like you can see stuff like that, which you're not going to see in like a hiring platform where everyone's trying to put their best foot forward all the time.
Sure.
And then when it comes to onboarding and things like that, where that gets challenging, honestly, is with low skill employees. So you're getting like, the $3 an hour Filipinos, or the people that are like, moving data or just doing super administrative tasks, because they need to be instructed at a level that is sometimes it just seems silly, right? Like, like when I first started bringing on VAs, there would be, I'd give them a spreadsheet and say like, hey, do this with it. And then I would message them at the end of the day. I was like, hey, where's that spreadsheet? Like, oh, it's done. I'm like, well, I don't see it on the drive. They're like, oh, you didn't say to put it back on the drive. I'm like, well, freaking obviously you put it back on the drive. Like, why would you not do that? But you have to specifically say to them, that's the next step at the end of the process. But when it comes to hiring like high skill people, whether that's like sales guys, tech people, things like that, the onboarding is very simple because they're professionals. Like they know how to have an office job. So like when I brought on our web developer, for example, I even, kind of like told him our stack for our website and all stuff that we were doing. And he was like, oh, it's like, well, are you like tied to this? Can I like do this instead? And I was like, would that be better? And he was like, yeah, this is why I'd be better. I was like, yeah, let's freaking do that. I don't care.
Yep.
You want.
That's awesome. That's exactly how I would want to approach it too. Like hire people that I was listening to a podcast today with actually Alex Hermosi. He was on Bigger Pockets, which is cool. And he was saying that the people that you're hiring should be able to like be picked out, and you should be selling yourselves on them almost, and why they'd want to come work for you. Maybe not at the level that you're talking about, but the point is that these people should be able to shift what you're doing to make it better, the efficiencies, and make them better. And somebody like that's like, yeah, I do this like this. This is why it's better. It's like, oh my God, that's amazing. I don't want to train you to try to figure out just to copy me, right? I hired you so that you could increase what I do and make me more efficient. So I think that's great. We're winding down the show here, but like before we get to the last couple segments, I want to know what your future goals are with the business. You got 40 to 50 units, right? You just are really ramping up the wholesaling. Like, what does the next 3 to 5 years look like for you, Mike?
Yeah, that's a good question. And that's something that I've actually been sort of exploring myself, especially as, the market starting to get a little bit more interesting and things like that. Like, I don't think it's necessarily going to crash, but I mean, if I'm being completely honest, I've been kind of spoiled over the last couple of years in terms of just like how my real estate has done. And I know we can still do well, but it's going to be a little bit different. And then honestly too, dealing with like crackheads all the time, like they'll start to wearing you a little bit, So it's just
unpredictable, right?
It's so unpredictable. It's an emotional roller coaster. So we've had a couple different iterations that we've explored. We've talked about doing different models of like the virtual stuff in these different markets where we become more like a marketing partner as opposed to like actually doing the wholesaling completely ourselves. So basically we got this idea talking to some people in GoBundance where they're like, hey, I like have everyone to do everything. Like if you don't want to run sales, like we'll just run sales and you just get us the leads. And we're like, well, maybe we can figure something out there. But like, I wouldn't want to be like a lead gen company because I feel like those are always kind of like, I don't know, whatever. Like you can go, everyone claims to do that, but they're not great. So we've explored pivoting that, like doing like sort of a vertical integration into like sort of a marketing arm like that. We recently started our podcast, which is the Collecting Keys podcast. And, honestly, my passion when it comes to this business is around the strategy of it and the problem solving of it, more so than the actual like going through the transactions and all that sort of stuff. So I'm in the process right now of bringing in staff to make it so I don't really have to be involved in the transactions at all. And instead I can just kind of be the visionary. And then with the, with our podcast, we, are able to dive into that a lot. And then along with our podcast, we have I want to say it's a group coaching program, but like really what we're trying to do is build more of like a community of people that emulates communities that we've been a part of where, people are learning and having success, but they're also able to do deals together. So like, I know we've been in GoBundance, we've been in like a couple other masterminds and things like that, where we're able to do deals with like-minded folks across the country when opportunities come up. Like we flipped a house in like the first virtual house that we flipped was over in Knoxville. We did it with someone that I had never met in person, only met them online in a different group. They had the contracts, we had the deal, and we just split it 50-50. Right. And I was like, that's a pretty cool experience that, I think is replicatable. So we have that we're working on too. And then, asset wise, honestly, shifting away from some of the residential a little bit and looking at some of the larger assets. So, we've looked at like some multifamily stuff. We've explored development a little bit, particularly new builds around the Northwest, because there's such a big housing problem up here, but there's tons of land. So those are all things that we've explored. So either way, I'm trying to figure out which one to actually hone in on right now.
Love it. Yeah. One last thing before we get to the last segment of the show, or the second to last segment. Can you talk us through masterminds, just like your thoughts on masterminds and how finding the right one can help you scale and leverage up a little bit quicker? I think you mentioned GoBundance a lot throughout the episode, and like specifically Corey, that's one Corey and I are like eyeing up for the future. So just talk about like the impact they've had on you and your business.
Yeah. So, I mean, masterminds have been literally the difference for us. I mean, so like from when we first started our wholesaling, we joined a real estate mastermind, which was called Create Cash Flow. It's Ryan Dossey's program, if you followed him on Instagram. And, you know, we were one of the early members in that, and that like changed everything for us because it gave us the base and it gave us the community. And I think the biggest thing when people are looking at masterminds and stuff like that is the person who's running it, are they truly playing the game themselves? Because a lot of them aren't. Like a lot of people, they create those things because they can't actually hash it and they're just trying to, you know, sell coaching, whatever. So that's a big thing. Cause that was the thing with Ryan was he still runs a very successful company. He's always adding new stuff. He was always very involved. So that's the big thing. And then also too, you have to look at the amount of value that they're providing. Like that is only a small portion of it, right? So a lot of people, they think that I'm going to pay, you know, $10,000 for this course and I'm expecting to be receiving a ton of value. But the thing is that a lot of the value you get from masterminds is going to be equivalent, or if not, or like it's going to be equivalent to or more than like what you put into it, right? So if you're a contributor to groups that you join or groups that you expect to join, you will get a lot more value out of it, regardless of what the person is, you know, that's involved, what the course material is. Like everyone, I think because we have this sort of public education mindset, you know, we think we pay for school, you know, like we go to college, they're going to teach us things, that's going to be the value. You're really paying for access to a group of people. And you need to approach it with that sort of mentality of like, I'm going to be a contributor to the group of people. People are going to want to bring me value as much as I want to bring them value. And that's where the, you know, the true growth comes from. So like, you know, GoBundance is a key example of that, you know, where there's so many people in GoBundance that join it and they're like, I'm just going to have all these people that want to connect with me. Right. And I'm going to, you know, have all the opportunities that come my way. And if you do that, you know, it's not going to happen. No one's going to want to connect with you and you're not going to have any opportunities. But if you're going there and you're like, I'm going to go and I'm going to find out how I can bring value to other people and how we can do stuff together. And then the world opens up to you and you start to get so many more opportunities than you ever thought possible. Like, you know, the GoBundance per year, it's like, I think it was like 10 grand a year for the basic. I'm in the champions now, which is 15 grand a year. But I have made that money back probably 20x from within that group, from doing lending with people, doing deals with people. We actually have a third business partner now who came in, who's from that, who helped us scale into some of these other markets. And the return I've got from that is like immense. And not only that, but just like the knowledge growth as well is unmatchable. But you have to go into it being a contributor.
Yep, I love that. The only thing I can attribute that to is like on a smaller scale is like if you went to college and you were in a fraternity, right? Like, or a sorority. Like there's a lot of people that the people that aren't in there, they'll say, hey, you're paying for your friends, but it's like paying for that access to that brotherhood, friendships, but future networking, like potentially future deals. Just like there's a lot more benefits to those relationships than you're just going to class, right? And so I think that's just so many life lessons learned along the way through the things. But I was just like on a dumbed down scale to like, this is almost like of turning on steroids, right? For like we talked about this, like the biggest game of your life, you don't have coaches in it, like to like, how do I scale up and make the life I want? And like, these are the guys that can help you potentially do that. You know, you have to pay into it, right? But 20x clearly, like we just talked about 2 deals or something like you did, or one deal, 100K right there, like bang, you know, maybe that was GoBundance, not, but just very cool. So thanks for sharing. Super insightful.
Yeah, totally. So we made it to the core 4, and it's more of a like rapid fire to try to get to know you a little bit more, just on a personal level. You mentioned a few books throughout the episode. The first question is, what's your favorite business or real estate investing book that you would recommend to maybe somebody trying to level up their game or get started?
Yeah. So for me, it's 4 Hour Work Week. It's my favorite book. Like that book literally changed my life. So back actually about 4 months before I quit my job, I read the 4 Hour Work Week. And, you know, it's funny, I was actually on vacation with my now business partner. We were in Hawaii with both of our wives. And I was like, bro, it's like, you gotta like read this book. Like we don't have to be doing this shit as engineers. You know, we can go and do anything else. And I've gifted that book a lot. And especially if you want to have a business that allows you to live like a more flexible lifestyle, I think it's definitely a must read. Some of the stuff's a little bit outdated just as technology's changed, but the principles are absolutely still super sound.
Yeah, I read it. It's one of those books that I want to read again. And I think I listened to it on audiobook. It's long, so I just I need to kind of refresh myself on it. But you're right, the principles are amazing. So
yeah, that was my problem. I'm like halfway on audiobook, and then it's starting to talk about like literally how to hire a virtual assistant or like tips and tricks. I'm like, dude, I need a book. I need a notepad. Like I can't just listen. It's not working. I want to pull over. So, and I'm trying, try to type in your notes and then you get smacked by a wife. Not cool.
Yeah.
No text.
Don't
driving,
do that,
buddy.
dude. Not with that wife. No.
No, she's not.
I'm just kidding.
I'm literally the nicest person. That's amazing. Okay. Question 2. If we, and this may vary a little bit for you, everyone's on different stage of their journey, but if we gave you an additional $50,000 today, tax-free, how would you spend it, invest it? Think of it as like a pie. You can dump it all in one thing or you can divvy it up. What would 50,000 mean to you and what would you do with it?
Yeah. So, I mean, for me personally, I'd probably look at like a private equity play if I suddenly have like free money like that. Or honestly, because my stuff has been relatively measured and conservative, I might just go and put it all into like Ether and just see what happens. Free 50 grand. There's no real risk implied for me there. Someone just gave it to me. I might just go put it in crypto. Dude, let it ride.
It's like very sore subject for me. I transferred all my coins from Coinbase to Voyager last year because like they gave you staking with it, and now Voyager's in the shitter. But I went not heavy, but I bought 5 Ethereum. I'm like, dude, I bought it cheap, and now it's fucking skyrocketing, or it's about to, and I can't touch it. Like I literally all my coins are frozen. So it's pretty sweet just to have like 20K sitting there. It's like just like. Fucking could do something with it. So it's getting me pissed off. I don't open the app anymore. So
all right, let's move on.
Let's move on. But dude, I agree. It's worth a play. It's definitely worth a play.
I don't, dude.
Damn it.
I can feel the pain. All right. Third question. Let's say Mike, what's been your biggest mistake in your real estate investing or your investing or your wholesaling journey, and how have you learned from it?
Yeah. So, I mean, biggest mistake, it's always hard to say because like hindsight is 2020, right? Like I mean, I would say the biggest mistakes, I didn't keep more stuff, especially, stuff when I was looking at buying things 2019 and 2018, because there was a lot of properties that I flipped back then that I made like a little bit of money, 15, 17,000. And I was like, damn, if I held that thing now, I'd have $300,000 worth of equity. So, the difficult thing with real estate, and I think that especially when you're starting out, people tend to have they tend to fix it on like cash on cash returns and cash flow and things like that. But, cash flow is a terrible metric in real estate. So when I heard Brandon Turner say this a couple weeks ago on your show, about how David Green always says cash flow is a defensive metric. That is so true. To the point it's like not even funny, right? Like the true value, as you guys know, is the debt pay down and the appreciation and all that sort of stuff. And my biggest mistake is not realizing that earlier, right? And if I had understood that earlier and I'd had more of an appropriate understanding about how powerful those other things were, I definitely still would have sold some properties that I did, but there were some great properties that I absolutely would have held on to because all the signs were there that it was going to be a great investment, even though the cash flow was like only a couple $100 a month. And I should have just,
the thing is about it is that people sell cash flow so much, and we're finally getting to the point where like, I now believe people that say that. I never did. I was like, what are you talking about, man? I got to be financially free. I need all the cash flow I can get. And then the more and more that I get into the game, the more and more I see cash flow getting eaten up by random stuff that happens monthly. I'm like, it's so true. And I just want to do some math there because let's say your property increases by $100,000 in equity, which few of ours have. Like it's especially our primary residence has been way over that, right? So let's just say you divide that by 500, okay? Because let's just say $500 a month in cash flow, which is like really good, right? Like on one property, I think that's really good. That's 200 months, right? So you divide that by 12. It would take you 16 years to get that $100,000 in cash flow on one property. So, and several of our properties went up. So you just don't see it in the moment. And that's the biggest thing about the equity and the spread that you build there. So
they say location.
Yeah.
You know what I mean? It's not just like you look at your properties and because it's $300, but it's in the shittiest place ever. It's not going to go up in value
Yep.
as quickly as something else will.
And when we first started out, we didn't we listened to people that said that. We didn't listen. We heard them, but we didn't listen to them. And we have properties in decent areas, but like if we could have done it differently, I think it's more so like, you know what, like hire a property manager day one. Don't worry about the cash flow at all. Park it there. Go do things actively to bring you more income and just hold for the long term. And I can't tell you how many people have said, I wish I would have done less flips and wholesales and held more, just based on what's happened over the last 12 years. And like, I don't care what you say is going to happen with the market. I genuinely don't. 12 to 15 years from now, we're going to be in a better position than we are today, unless there's an apocalyptic event, right? It may not be better 1 to 3. It may not be better even 5, but I can guarantee, at least I can't really guarantee, but
I was gonna say, you signing off on that, buddy?
but you know, based on, you know, past, like it's just going to be in a better spot as long as you hold for the longer term. So
yeah.
Anyway, question 4. There you go.
There you go. Get off your soapbox, buddy.
Dude, all right.
Last question of the core 4 is, I love this question. What do you want your legacy to be? So what gets you out of bed every morning to do what you do? Basically, what's your why?
Yeah. So my why, like really what gets me out of bed is I want to, you know, impact, like I want to do a lot of cool stuff, like first off, and I want to provide the opportunity for other people to do a lot of cool stuff. So, you know, there's, especially growing up in the United States, my family is European for the most part. So I'm one of the few people in my entire, you know, extended family that lives in the United States. And so many of them have different views on life and travel and just like perspectives that they have that we don't get here. And so one of my biggest sort of legacies is like, I like to pursue is like to be someone that has able to give other people the opportunity to have those same sort of eye-opening moments, you know, being able to go to places that change your worldview or be a part of, you know, movements that change your worldview. Like, it doesn't necessarily have to be like travel, things like that, but being able to go to events, like be a part of causes, be things like that. And whether that's, you know, by creating those causes and opportunities myself, whether that's like, you know, bringing my family and friends on those trips and opportunities, whether that's, you know, inspiring other people to pursue that by showing them how possible it is. You know, I think that so many people, they cut the opportunities of their life short, because, you know, they're still stuck into the mindset of going to school, get a job, have kids, you know, buy a house, stay there forever, do that. But also too, just because us as a culture in the US, we don't encourage that. And I think that that's a major shame that a lot of other Western countries don't have, you know? So, you know, my ideal legacy, I guess, is if I can be the guy that does a lot of cool shit, but also people do cool shit because they saw me do it, or like because I encouraged them to do it, or I helped them do it, or whatever it was. That's sort of my ultimate goal.
Excellent.
Love that.
Love it, man. So we've made it to the last drop. Last drop is, knowing what you know now, Mike, what advice would you give your younger self if you can go back? Let's say you're speaking to your 18, 20-year-old self.
Yeah. I would say, you know, trust your gut earlier. When, you know, back when you started going to school and you knew within the first semester that it was not what you should be doing, should have just listened and tried to explore something else. Because that was also the problem too back then was, you know, I knew that I wasn't there, but I chose to spend my free time just, you know, I was also 18, just how you do it, right? Trying, you know, just coping with it and just dealing with it because you're still in the school mindset. And if I had spent that time trying to find stuff that I was actually into, you know, which would have brought me to business, which would have brought me to real estate, I think it would have been, you know, I would have turned out a lot better. Like I'm pretty envious sometimes of like the Gen Zs and things like that who have like TikTok and they're seeing like, you know, young people, like they learn about the YouTubers that are their age that are like making money and like, you know, starting businesses and doing all those sort of things. And sure, there's a lot of fluff in there, but it still is creating that little bit of a spark that did not exist, you know, in 2009 when I graduated from high school. Like no one had that at all.
Yeah, we're right. It's funny. We're the same age. I didn't even realize it. I graduated in 2010. I think you were 09. But it's never been, and I say this with all due respect, it's never been easier to make money as a younger person with this thing, with this technology. It's never been easier. Not that there's not an excuse, because like it's still difficult, but that doesn't mean it's still never been easier. It's so readily available, and I see 16-year-olds that are making ridiculous amounts of money on YouTube and just, taking advantage of those opportunities that come their way. So very cool. Mike, it's been a pleasure, man. We really appreciate you coming on. If people want to learn more about you, network with you, get in touch with you, follow your story, what's the best way for people to do that?
Yeah. So first off, if you have any interest in learning about how our business runs, and like how to find off-market deals, I have my own podcast called the Collecting Keys Podcast. And it is kind of like a deep dive into how exactly we find discounted properties and we run our whole process. So go check that out. And then if you want to connect with me directly, email is honestly a good way if that's your thing, mike@collectingkeyspodcast.com, or on Instagram. You can, I'm at Mike_invest, and shoot me a DM on there. I'm always happy to chat with people.
Excellent. Mike, thank you so much. It's been an absolute pleasure having you on the show. You dropped some bombs on us, and who knows? Maybe Corey and I will dabble a little into the wholesale field here coming in the future. You sold me. I'm excited. So
yeah. So cool. Right on. Well, thanks guys. I appreciate you having me on.
Thanks for tuning in this week to the Weekly Juice Podcast. If you liked what you heard, please leave us a 5-star review on Apple Podcasts, subscribe, and share with friends. The more ratings we get, the more ears we'll get on our show, and in turn, we'll be able to provide you with more high-quality guests. You can also find us on Instagram at Weekly Juice Pod, where we post daily tips and tricks and document our own journey towards financial freedom. Make sure to tune in every Wednesday to get your weekly juice.